Hey, quants, we're going to take a look at the market today. I haven't looked at them yet, so this will be the first time I'm reviewing the charts this morning. I'm not going to go over a lot of charts, just BTC as I typically do. And then I want to jump into the strategy that I have been teasing. That's just a simple DCA strategy. So quickly looking at Bitcoin here, it looks like that broadening wedge trend line is on the support line there is still holding up, but it's definitely getting a little bit precarious here, hanging around the 200s the way it is. Ideally, what I would have preferred to see, which I mentioned yesterday when price was sitting above the previous close, was to see the market continue up and then tag the top of that trend line. That doesn't mean it's not going to happen. Obviously, maybe these trend lines are totally invalidated at this point. I like to draw trend lines, but they're not part of my primary strategy. They're just something I layer in with when I'm just doing discretionary analysis. It's just something I like to layer in. So as it stands, hanging out at the 200s, in traditional terms, all that means is Bitcoin is currently sitting at fair value. So it's not relatively high, it's not relatively low. It's just kind of hanging out where I would expect it to mean revert either in a bear market or a bull market. So at this point, there's really no action, in my opinion, just kind of sitting on my hands, waiting for something to happen. The unfortunate side of a strategy like this is that when it dumps, it will typically dump really fast, and then you're going to be underwater more than you'd like to be underwater, or you would have lost more capital than you would have preferred to lose. So just something to consider if you're building out your own strategies, and if you are using something like this as a base, then obviously you might want to find a way to layer some capital out when layer some capital out based on your preferences, maybe when the market is trending up, or when it starts to kind of break down or look like it's breaking down. So I wanted to mention that I did not really talk about some of the support lines in terms of the PA pivots or the Gann swing indicator. And so at this point, we do have a low down here. And so I was mentioning from a very simplistic standpoint, our first entry would have likely been at the break of this candle here, which it's closed below. That doesn't mean that this position would necessarily be closed if you took that, because you probably would have been using the low as some kind of support, and ideally a low with some kind of an offset, so that you're not just getting triggered, your stops aren't getting triggered just based on a simple break of that low. Again, based on your own preference for risk. So with that said, we did put in a lower high here, and we have a lower low here. This is clearly indicating that we're in a downtrend in terms of Gann, in terms of the Gann swing indicator at this point. And so continuation of that would be a break of this low here. So considering we'll be below the 200s at that point, obviously, and below this not great broadening wedge. I mean, obviously you could change this broadening wedge to come here. Maybe actually we should take a look at that and see what that would look like, because it looks like there might be some opportunity to provide that. Nope. So I was thinking that those lines might line up a little bit closer and get a 3 touch, but I'm not seeing that just yet. So anyways, point is you could draw it way out here, but now how much risk do you want to allow yourself before you just decide to take some out of the market or potentially exit the market altogether? Obviously, that's up to you, but we are seeing the potential. As I mentioned, right now it's just sitting at fair value. But if it starts to break below the 200s, break below this trend line, or if you wanted to draw another trend line, it could break below that one. But I prefer horizontals, and one of the reasons I actually like Gann analysis is because it's strictly based on price, and there's not really a lag on it. It's based on the current low and high, and so you're getting feedback immediately. That is one thing that I will say, versus just like some kind of a trend following strategy. Adding some Gann or just straight up using Gann gives you some of that the responsiveness in terms of an indicator that you're not going to get from some of the moving averages that are lagging based on the length or the number of days or months or whatever length you're using on your moving averages. So anyways, point is, if we break below here, there's a lot of indications that the market's probably going lower at that point, if you're not already seeing that as it is. So not what I hope to happen, but something I'll be keeping an eye on. So now let's move on to the strategy that I was teasing out here. So I believe that is over here. So this strategy is a DCA strategy. The concept came from something I saw Eric Crown do on his, and I don't think he posted it on YouTube, but it's something that we've posted in the Quant Prime Discord. So when you join as a member for Quant Prime or some of the other programs, you'll get access to a Discord server that is only for members, and there's a lot of strategies that Eric has provided. I put a few in there. A lot of the users have put a whole bunch of strategies in there. And so the point about that is you're not starting from scratch, right? You get a base that you can start with. So anyways, Eric had put something out, and it was kind of coupled with the idea that I want to just work on building long-term wealth. I'm not interested in short-term trading. And so the concept was, I just want to buy something when the market dips X percentage. And so he worked with one of the individuals from within that Discord group and put together a fairly simplistic indicator that just after price drops a certain percent, you buy into the market. Now, the one thing that that particular indicator did not show was it did not show any sell signals. So maybe if I can load that up. I don't want to have to look for it right now because it's going to break the flow here. So let's, but the point is you'll just see a bunch of buys when you see lows hit. And so I thought that was an interesting idea. I think for the majority of individuals, something like that, or if you're just getting started, it's kind of like an investment strategy. It's not a bad idea. It kind of helps you pick out lows. So it's kind of a improved DCA strategy where you're buying, but rather than just buying strictly on time, where you don't care if you're buying at the top, you don't care if you're buying at the bottom, you're just going to dollar cost average throughout time. That's a very common approach. I've seen that, and personally, I've utilized that when I was very new to investing. And you're just buying into a 401k account or something like that. Obviously, you're just going to be DCAing based on whenever you get your paycheck. And so that'll come out on a monthly basis or a bi-monthly basis or something like that. So very interesting idea. It's a little bit optimized in the sense that you're trying to catch lows, but you're not strictly concerned with catching the absolute low. So I took that idea and it kind of modified it a little bit with the idea that I would also like to have some sell points here, right? So I'm not just going to only ever buy. I'm going to actually buy when I think there is a potential low or when I think there are lows coming, and I'm going to average into those lows, but then at the same time, I want to average out at what I think might be a high. And then that way you're actually increasing the amount of capital that you would be able to put to work at the lows. And so this is a very simple DCA indicator that I put together. The DCA indicator has a buy threshold percentage. So when price drops that percent, in this case, it's 10%, then that's when you're going to buy. And when you trigger a sell, that's when you're going to sell. And so you have 2 points now that we're kind of keeping track of here. So we have a sell threshold. And so I'll talk about this a little bit. Like, when do you want to sell? Do you want to sell when you sell relative to your buys, which is what I've implemented here, or and then when you come into a buy, how do you indicate what is the top? And so I alluded to that previously in some of the videos that I was doing when I was kind of teasing this idea out. And so the idea here is, how do you indicate what is a top? So we're going to say that we will buy 10%, but we're going to buy 10% from where? And so the very first example that I've used is just using the high of the candle. And so I'll track the high of the candle as it moves up. And so the highest high is actually how that's going to play out. And when I start buying, that will effectively reset that kind of idea, right? So once I buy, then the highest high is reset and I'll be looking for another high. I Actually, I misspoke about that. So for the first implementation here, let me go ahead and hide this. What we're going to do is we're going to look for the highest high. And so what that means is you see all these cells. Let's not concern ourselves with that right now. We're going to consider when we're going to start buying again. And so let me zoom into one of these points. So the way the default case is going to work is you're going to say every time I set a higher high, that's going to be the current high that I'm looking for a 10% drop. So these don't drop from the high to the as the price is moving up. And just as a FYI, I'm on the monthly time frame. This, you could just play with this on other time frames. This is an indicator I intend to publish as a public indicator. I might go through and try to do that online right now. That was something I was thinking about doing, but we'll see how long this video gets. So point is, this is the highest high, and just as a note, the all-time high tracking source is the high. I've set this so that you can actually change it. So if you want to use the close as the high, meaning that you're going to only track a 10% drop from the close of a previous candle, you could do that as well. So this will give you some flexibility to play with this kind of DCA concept. But let's get back to the very simplistic case here. So I'm just going to say whenever the highest high is the current highest high is broken throughout all time, then that's what we're looking for a 10% drop from. So in this case, you see here, there is a drop, and let's go ahead and measure it. So this drop from here to here was a 53% drop. And so obviously that was greater than 10%. So that we're going to go ahead. So we're going to go ahead and buy here. And so we're tracking. If you look at these values here, you'll see they might be a little bit hard to read here, but there's a buy level of 50%. The reason that's a 50% buy level is because if you recall, I'm using a 10% threshold. So obviously every 10% I would theoretically buy, but because it dropped 50% in a single candle, I'm only going to buy once, but I understand that that was a 50% drop, and I want to track that so that I know the next buy isn't going to be less than that, meaning that if the candle comes up, I'm not going to, but it's still 10% lower than the previous high, I'm not going to actually buy that one. I only want to buy if it now decreases more than 50% so that I'm buying at a lower low than the previous time I bought. And so conceptually, if you this is I think a fairly simple idea, but let's get back to the higher high thing that I was referring to. Let me reset the chart just so that I can get the values here, and then I'm going to zoom out a little bit. So I was looking at this one here, and so the point is I'm going to buy here, and I am using I don't know if I implemented pyramid on here. That was something I definitely planned to show. Oops, wrong indicator. Let's look at the strategy. Oh, well, back to the point here. So for the indicator, yeah, I did plug this into the skeleton key so we can test that. But from an indicator standpoint, we're just printing the buy and the sell signals. So it doesn't really matter it doesn't matter if I'm pyramiding in this context, but what this does allow me to do is it allows me to implement pyramiding or leverage pyramiding in a strategy. And so I'm for these right here, just the indicator itself. And so obviously you can only lose 100% of your absolute value. So if it goes down 100%, you're at zero, right? And so as price drops, you could potentially have up to 10 buys if you're buying 10%, right? And so that's not likely to happen, especially on the monthly time frame, because we're likely to see percentage drops greater than 10%. And so this was a 50% drop, and so our buy is at 50%. The next one was 70%, and then the next one was at 80%. But that means that price dropped over 80% from the top. And so let's just measure that, right? So 80% here, we went 82%. And so it did actually go a little bit farther, but the next increment that we would have been looking for a buy would have been 90%. So we didn't see a 90% loss in this particular drawdown, but we did see, or drop in market, but we did see an 84% drop. It looks like that was probably the largest one before it recovered. And so this strategy, if you would have been leveraging a strategy like this, a DCA strategy like this, you would have made 3 buys. So that you would have bought here, you would have bought on the very next candle, and then in this case, you would have been waiting because this one was a 70% drop and the previous one was still in the context of 66%. So I think it was this candle below, it's hard to see because the green label overlays it, was actually lower than this one. And so that was the point that I was saying. This is 66%, but we already bought on a 70% drop. So we're going to wait until we see even a lower low. And that's what comes in here. So back to the sell points. So because I am now waiting, the way that I'm tracking the all-time high is I'm waiting for price to break the previous highest high, which in this case is going to be the lifetime high, right? And so you won't see any sells, even though these obviously would have been potential targets to sell. This is up 300%. You might have wanted to take some profit there. Now that's why I introduced some other options for filtering. So I have apply the Gann filter, and when we apply that, we're going to see that we can then we would then be able to sell by tracking when the Gann swing indicator actually, actually we're not using the swing indicator in this case. We're just using up bars and down bars, inside bars and outside bars. So simple Gann terminology, but we're using those concepts to determine what's a high in that case. And so, and then I'll get to the low here in a second. So for this case, we didn't sell here because it didn't break the previous all-time high, which was over here. You'll notice that I do have some other lines on here. These lines just track the highest high and lowest low. And so in this case, the next high was broken here. And so this is where we would actually implement a sell. And so we have the same concept of the sell level, but the sell level is going to happen from the lowest low because that's how the low is being tracked at this point. And so we make a sell here. Again, we set a highest high here, higher high here, higher high here. That's why you're seeing these sells, higher high here. And then we're going to wait. From this previous highest high here, we now see a very large drop, which was another 50% drop. So we would have bought here, and then we would not have sold until we broke that high again. So the strategy, just on the surface level, you can kind of see how this plays out. So now we're going to continue to buy as we drop down. We've got 4 buys that we signals that we get here, and then we're just waiting until all-time highs. Now there's clearly a flaw in this particular type of strategy if you're trying to trade short term, and if the market that you're trading is not ever going up. And that is the case that there's no stop loss here, right? We're gonna buy, and then we're gonna only sell when we break a high. So in the context of DCA, this is how we're going to apply that. And so this is not something, obviously, to be short-term traded. This is just a simple way trying to optimize if you're going to utilize something like DCA, how would I potentially optimize that by having much fewer sell signals and much fewer buy signals, but trying to pick something closer to a macro bottom and something closer to a macro top. And so that is the base for this. So now let's implement, or let's apply this. Again, I kind of mentioned this already, so you can use the all-time high tracking source. I like using the highs in this case, but you could use the close if you want to get something closer to what might actually occur in the context of waiting the price that you would exit the market, because the likelihood of you picking the high is very low, of course. However, after that candle closes, you know what the price was and you could execute it at that time. So that's something to play with. The all-time low tracking source, same concept. The buy signal source. So what this is going to indicate is this, and I believe I had I added some comments or just some information here. I don't know that people ever look at those really, because I've had questions in the past where sometimes the information is right there, but it's not right in your face unless you hover over it. So price source for buy signal triggers, and so low for conservative buys. And so in this case, what we're waiting for, I wouldn't say that's actually conservative, so maybe the wording on there should be a little bit, should be corrected. But the point about this is if I change this to close, then the value that I would be tracking from the all-time high is to the close here. And so I'd be looking for a close of 10% or greater versus a low of 10% or greater. And then same for this sell signal source. So when I want to sell, because I'm looking at sell of 30%, I would be looking at the close value instead of the wick high on these candles for a 30% trigger. Again, there might be some benefits to that if you're waiting for the full candle closure. Something you might not want to wait for is if you're playing long daily time frames here, is if you see that signal get hit, even if you're a little bit under it, or obviously if you're a little bit over it, you still want to go ahead and execute that intra-month. And so that's not something I'll be testing with a strategy, because strategies work best and are more reliable if you execute those signals on close. And so that's how when we look at the strategies will work. Okay, so let's go and apply this Gann filter. So now when I apply the Gann filter, you're going to see I get a lot more signals. The reason I'm getting a lot more signals here is because I'm using up bar and down bar logic to indicate what is the high value here and what is the low value here. And so as an example, we will trigger a buy signal here. I didn't change my thresholds at all. And so we're still going to see this drop occur down to 55%, right? Which is going to give us that 50% buy level. But I'm not waiting until I get a higher high to then trigger another sell. I'm actually just waiting for an up bar or an, I think I saved the outside bars to only buy on the outside bars. When I publish this, I don't want to, because this video is going to be pretty long, I don't want to go into the specifics of the code right now. But when I publish this, I'll put a link in the description where you'll be able to find that. And if you look at the code and you have questions, you can ping me on TradingView. If you're a member of the Discord, you can ping me in Discord and we could talk about that. But the point is here is I'm using an up bar, for example. This is an up bar. And so because this is an up bar and it actually hits that sell level of 30% from the buy, then we're going to go ahead and trigger a sell here. So now we're buying low and we're selling much more frequently, right? And then again, we get that we get the buy level of 50% again, and then from here, this is going to sell at the 30% level. Now, if you're paying attention, you'll remember that I said it might not be you're unlikely to get the lowest low of the low on this monthly candle, right? And so what we're measuring here is we're actually measuring from the low, because the way that I have this set, we're measuring from the low to the high. What you might actually want to do is try and reference close values to see how high that would be. And you see in that case, you only got an increase of 12%. So neither of these would have actually triggered your sell signal in that case. So something to be aware of if you want to, and you have the values in the indicator to be able to change those around so that you can get something that's a little bit more closer to the close if you want. However, we are looking at monthly time frames, and so it's very likely that if you're manually executing this, which I'm not necessarily suggesting you do that, but if you were playing this manually versus strictly off of a strategy on a monthly time frame, I would guess that you're probably going to have an easy time finding something within this wick of the monthly candle that you could buy versus the close here. And similarly, I would expect that you would be able to find something in this range that's closer to 30%, where you would be able to get your buy there. And so just if I'm playing with this, so if I were to get here and then I get something, how far do you have to be? 26. So in this case, you almost have to be at the top to get that 30%. So for this particular instance, you might have a hard time capturing that full 30% because you would have had to been much closer to the bottom of the candle and to the top of the candle. However, there are other instances here where you don't have to be that close. For example, this one, if you're on the close of this candle and just somewhere relatively close to the bottom of this one, you would have still been able to capture 30% on the close of this candle. So something to play with. But that is what the Gann filter is going to do for you. I would not suggest using, these were not built to be used together, the filtering options. So I'm going to go ahead and turn this off. And then now we have buys set the all-time low. So previously what you saw, that sell target, we were setting from the low, but it doesn't change the all-time low. So what this what this option is going to do is you'll see that line that tracks the all-time low now jumps up. And so whenever I trigger a buy, that's going to cause the price to drop down to where the all-time low is. And so we have, that'll happen after the candle. So it's dropping after this buy occurs, it starts to drop down here. Just because it's a line, it's not completely static here. So, or I say it diverges a little bit because of the way the line is actually drawn throughout time. So the buy sets the all-time low is another option for giving you a chance to actually get more sells or more buys. So in this case, we're not actually using we're not using like up bar and down bar logic to determine if we should be tracking sales anymore. And I should mention that both of these apply to selling. And so the idea is once we start selling value, it gives us an opportunity to sell after we've made a buy without waiting until the highest high is breached again, for example. And so this is a modification on how we might be able to sell more and then theoretically or potentially buy more back in as the market continues to drop. And so in this case now we see similarly different targets, for example, or different signals, but we do see that we are getting 30% level here, 60% sell level here, and 120% level here. Now, obviously you can't sell more than what you have. So in this case, this might argue that you would be 100% out of the market. If you're implementing a strategy, you don't necessarily have to execute on all of these. You could skip every other one. In the strategy that I will be sharing here in a second, the way that I utilized it is I will apply some pyramiding to it. I'll apply some different exits. And so even though it gives you a 30% sell level, that means that's just your sell signal. That doesn't mean you have to sell 30%, for example. You can just sell 10%, right? And so if I sell 10% here, I still have 90% of my portfolio that I could potentially sell. And so even if I see this 120%, obviously in the context of Bitcoin, you could see it go up to hundreds or thousands of percent. In the past, I don't think we're going to see that now, but it is definitely possible, I think, to still see tens of percent, maybe even upwards of hundreds of percent from the bottom, where you would be able to trigger those sell signals. And in that case, again, it's just a trigger to sell. It's not telling you to sell 120%. It's just saying, hey, we've hit an increment of 30%. And since we've hit that increment of 30%, you want to sell some of your portfolio, 10, 20, 30%. Right now I have it configured to 10%, which means I could, 30%. I take that back. I don't have it configured to sell any specific amount. I just have it configured to trigger those sells. When we look at the strategy that I'm using, I actually implemented it. I believe I had it implemented to sell up to 5 times. And so, 5 times 30, that would get you up to like 150. Oh yeah, this jumped one because this jumped 90, 120, 150. And so you'd be selling fifths or 20% of your position as you went up. You don't have to do it that way again. So now that I feel like I'm rambling, let's jump into, I think I've gone over all the simple pieces here. Buy. There's a show buy sell signals, show reference lines. Those are the lines there. Show info table. You can show the bar type. So the bar type is just part of the Gann analysis. That's actually something super simple. I know I've shown some examples of doing coding or vibe coding, some Pine script with AI. I actually saw it get it wrong, but it's a very simple concept. And so AI should be able to give you bar types. But anyways, the code would be in here as soon as I have this published. And then the info table. The info table, I was really more using this from for a debugging perspective. And so it'll give you what the current all-time high is, the lowest low. This will change depending on if you're using buy sets the all-time low, right? Drop from all-time high. And so this table will give you information based on the latest candle here. If you use the bar replay, you could get this to update as you play through time. I started off using that for debugging, but frankly, I didn't find it that useful. And so I do as I normally do, and I log some values into the data window. So if I hit Alt D here, that's going to bring up the data window, and so you can see all these signals here. I'm logging similar values here, and then that way, whatever candle you're hovering over, you can actually see that value. So this is just a more effective way to debug your scripts than doing something like a table, in my opinion. And so let's go ahead and go back here. So now back to the strategy. So I'm just going to turn this off for now. I don't really want the table there. All right, I'm going to turn on the strategy. And so this, again, on a monthly time frame, this is a strategy throughout time. The general point here is because we're looking at Bitcoin, we would be selling Bitcoin and then buying Bitcoin. And so what we're looking at here is we're looking at, I guess this is the, yeah. So what we'd be looking at here is an increase in the amount of Bitcoin that we would be holding over time. So you have obviously an increase here. There's a huge drawdown, which is very common if you are using trend strategies or very simplistic trend strategies like this. But I think there are simple starting points for people to kind of wrap their head around some of the ideas here. There's 15 total trades. There's not a lot here to go off of, so take that with a grain of salt. You're not necessarily going to want to sit here and watch this play, do a whole bunch of forward testing. But I think this is a simple enough concept that you could probably run with something like this if you're just doing like a DCA strategy. I mean, this isn't something that I'm trying to like trade algorithmically on a shorter time frame and just let it go and not pay attention to it and expect it to not lose expect some bot to not lose my money. So let's see. So back to the strategy here. So all I'm doing here is I have the buy signal and I've just plugged in the buy signal. I'm going to enter when that's true. I'm going to enter when the sell signal is true. The properties, I'm not actually doing any pyramiding here. And so that's where we can add some additional layers on here. So if I want a pyramid, I believe so this is going to allow me to enter positions more frequently or multiple positions. And so I don't think it changes after 5 because I don't really think you see any orders after that. I think about 4 is about as high as, you can pyramid. And so obviously in this case, now you're seeing a drawdown of more than you've put into the market, which ultimately just means that you're going to be upside down on your position. You'd still hold your Bitcoin. So if you're buying and then you get a drawdown in these positions, you're still holding your Bitcoin. Your Bitcoin's just worth less than what you would actually put into the market for something like this. And so if you had faith in Bitcoin, that might be okay with you. I mean, that's not for me to determine, right? That's up to you and how you feel about Bitcoin. So the other aspect that we can apply here is the multiple sells. And so if we're looking at if we're going to be using multiple exits here, this is also something that we have built into the skeleton key. So I'm not going to use specific exit points. What I'm doing here is I'm saying, give me 5 exits. And so what that's going to do is that's going to, kind of how I described it before, is that's going to say, okay, I will exit up to 5 times. And so this will apply a 20% exit because you have 100% of your equity and you divide that by 5, that's 20%. So each time you exit, you're going to exit with 20% of your position. And so you can see how this affects your positioning. So you get a better P&L. You do have more of a drawdown. You're going to enter more trades because you're selling now. And then you have most of your trades, quite a lot actually, as being profitable. And so and then from here, I can apply the Gann swing indicator. And then you'll see, obviously, there are some cases here where we're selling and buying a little bit aggressively. And so as a result, we're going to end up having drawdown periods much longer and much worse. So again, just that is up to you to configure and play with. Maybe find something that works for you. If this is something you want to try out, you can change your buy thresholds. Maybe you want to wait and buy into, like we saw those ones that I was looking at before. It didn't happen until most of them, the very first buy was like after 50%, right? And so you might want to wait before your first buy until you drop 50%. Now, who knows with the way that the market's evolved now, if that's actually even going to be a viable buy target. Maybe the market only dips 30% or 40%, and then you just miss that altogether. But again, this is a long-term time frame, so something for you to play with. And then let's also test if we adjust the buy sets the all-time low. So similar idea. In this case, this does not work out near as well. And so probably not a good idea to run with that one out of the gate. You'd want to play with some of these some more to see if something fits better. But the option is in there for you to play with. So, all right, that's what I had been holding on to and what I wanted to show. As I mentioned, I will put the link into the description. I'll publish this. I tend to have a challenge when I publish Pine scripts. Usually they'll be up for a day or two and then they get taken down because I didn't include something or the description didn't meet the standards. Of course, I use AI to try and match those standards. I have a format. I've worked with some other individuals like Caretaker and tried to follow a similar format to what he follows because he's had quite a bit of success publishing indicators. I think he's actually even been, I believe he's got promoted to a wizard in PineScript now. So I've tried following those concepts as well. And sometimes they just kick it back. So I will put it in there. If it's not available, what I would say is just check again later because I will try to hash out whatever issues I have after publishing this. If it gets kicked back, so that I can have this published so you guys can have access to that. And yeah, any comments just put them in below. If you have questions specifically about this indicator, you can hit me up on TradingView. Quant Alchemy is the username there. And yeah, hopefully Bitcoin doesn't tank. That's my hope. But obviously it's going to be volatile and we'll see how it goes. So peace, quants.